Hey guys, so I actually bought stuff today. So I filmed this once today, but I fucked up the audio and video, so now I'm doing it again. So anyways, before I go to the stock I bought more of, I want to show you my portfolio for my Grow My Portfolio 2020 challenge, where I tried to get my portfolio from where it is now to $25,000 by the end of the year, by December the 31st, no matter what happens in the market. Now, if you watched my video last week, you will have seen me very happy because I passed 20K. I was very happy because of that. Well, things aren't looking so great this week, as you can see. But anyways, let's go over the positions real quick. Bank of America, we are up 4.70%. Cloudera, we are up 9.81%. Cisco, we are down 5.25%. Facebook, we are up 44.34%. Intel, we are down 4.82%. Realty up 21.9%, Pfizer up 14.65%, Qualcomm up 40.8%, Revolve we're up 55.30%. That used to be my worst stock. Sony we're up 14.64%, AT&T we are down 0.96%, Tapestry we are up 11.80%, and Uber we are up 7.77%. That gives me a total equity of $19,590.42. We are up 14.79%. And the reason why we are doing so terrible this week is because Cisco and Uber really fucked up their earnings last week. So like I said in the beginning, I bought some stuff. Just today, I'm recording this on Wednesday, you'll be seeing this on Friday. Just today, I dropped $400 into some more AT&T shares. So a couple months ago, I released a video where I go in-depth into AT&T, which you can watch up here. But for now, AT&T is trading at $29.73. Not only is that close to the 52-week low, I mean that's close to the 5-year low. I mean AT&T is trading real cheap right now. If you do your own research on AT&T and you think AT&T is worth it for the long run, this is a great price to buy it at. I mean, take a look at this dividend yield. We are approaching 7%. Now, a safe dividend yield is normally between 3 and 4%. So seeing a dividend yield of 7% might seem attractive at first, but I mean, it's sometimes an indication of a very risky stock, and it is. It can be a risky stock. Take a look at its payout ratio over the past several years. Like right now, it is paying out 126% of its net income. So that means it is paying out more dividends than its bottom line. And yes, that may be a problem. However, I mean, it's a dividend aristocrat. It's been paying out dividends and increasing dividends for 36 years in a row. So that means back in 2015, when its payout ratio was 208%, which means it was paying out over twice its net income in dividends somehow, it was still increasing dividends. I mean, it seems to me that AT&T is very dedicated to paying dividends, and that's why I'm buying them. I do see some growth potential, which I'll get to later. But right now, I am buying AT&T solely for the dividends, and that's why I don't care that the price is down to 29.73. As a matter of fact, I mean it can stay this price forever because it is, as long as it keeps paying dividends, it is a really cheap way to rack up a lot of dividend pay. And yes, I am worried about the payout ratio, but take a look at this. So this is the cash flow statement from their latest quarter. So this their net income is $1.5 billion. They're paying out $3.7 billion in dividends, so it is well above 126% this quarter. However, net income is only part of the picture when it comes to cash. Its overall operating cash flow, once everything is considered, is $12 billion, and it's only paying out $3 billion in dividends. So it has room to continue to pay out its dividends and grow its dividends over a period of time. So maybe I shouldn't be too worried about the payout ratio. And they do have a lot of debt, and it is not going down. It is not going down over the quarters. No. However, they also have a lot of equity. So they actually have more equity than they have debt. So that means that if they really wanted to, they can sell off all their stock, all the stock that they hold, and pay off the debt in full if they absolutely have to. So that gives me some security there. Not only that, but they have far more total assets than they have total liabilities. So that's also something. So maybe the situation might not be so bad. Now, it is something to worry about. Like, it's not completely safe, but I think we're fine. Now, I'll mention that I'm buying AT&T solely for the dividends and not for the growth, because I don't see AT&T blasting off over the next couple of years. However, I do see some growth potential. Let me show you something. So AT&T has its hands in a lot of businesses. So they obviously run mobility, which is their cell phones, entertainment group, which is their TV channels over, you know, cable and stuff. They also do high-speed internet. They also, I think a couple of years ago, they recently acquired Warner Media. So that means they also have a hand in Turner Broadcasting. They have a hand in HBO, Warner Brothers, a lot of big names, and they also have presence in Latin America. So what I'm getting at is ATT has hands in a lot of places, and I think they acquired Warner Media to try to grow. And over the past couple of quarters, Warner Media has been growing steadily until the pandemic. Now, as you can see, during the pandemic, yeah, their communications dropped off a little bit. However, Warner Media, they dropped off a lot. They lost $1 billion in revenue from Warner Media. Just over there, well, they lost a lot more than that over the past couple of quarters because of the coronavirus. Because, you know, everything's locked down and it's hard to make movies like that. And so Warner Media took a hit. My thesis is that once all this pandemic shit ends and we get back to some form of normalcy, and movie and theaters and entertainment studios get back to actually making movies, I think these revenues are going to shoot up over the next maybe several quarters, maybe a couple of years. So I think down the line, this revenue is going to shoot back up. And not only that, but 5G is just around the corner. And I think that once 5G hits, they are going to get a boost from their business segment and from their mobility. So I think there is some growth potential there. Now, I'm not saying AT&T is going to like shoot for the stars. I don't think they're going to get back to that. But what I am saying is that there's a chance their stock price may get up to pre-COVID levels. You know, late 30s, maybe early 40s. And if I put enough money into the stock now, I might get a little bit of growth out of it. Not a lot, but some. So I could be banking on dividends and some growth down the line. So my plan is to go a little heavier into AT&T than normal, as long as it stays around this price. I think it's an opportunity. Again, I don't care about the stock price. It'd be great if it goes up over time, but as long as AT&T keeps paying their dividends and doesn't stop or suspend or lower their dividends, I think I'll be happy owning this position in the long term. But anyways, what do you think? Do you think AT&T is a good buy right now? Do you think we should be skipping AT&T? Let me know what you think in the comments. But anyways, take care, have a great day, and eat your vegetables.